Welcome back to Your Average Investor, the channel that looks at my journey through investment, budgeting and finance. The stock market has increased steadily over the last few weeks, despite coronavirus still being an issue globally. In addition, yesterday America announced that they're currently in a recession. Despite this, the stock market is still increasing. There's lots of discussion in the news at the moment about why there might be this disconnect between the stock market and its steady increase and the current state of the economy. We're not going to take too much of a look at that today, but what I thought it would be a good opportunity to do is take another look at my Trading 212 portfolio and see how the growth of the stock market has impacted my portfolio. The last time you took a look at my Trading 212 account, you saw me buy Boeing and you saw me buy into Shell as well. Since then, I've also made that speculative investment within Nikola, which you'll see in a moment has increased a massive amount in the few days that I've held them. So without further ado, let's hop into my Trading 212 account and see what's happened to it over the last week or so.
Here we are inside my Trading 212 account. From my initial portfolio update, my portfolio was valued at £272, and you can see that this has now increased to £539, with a total amount invested of £432. This increase is partly due to my continued investment over the last few weeks and days, partly because I've been given 3 free shares from people signing up through my referral link, and also due to the stock market's increase over the last week or so. While the stock market has increased quite steadily as a whole, most of my increases have come from a few specific companies, as you'll see in a moment. This all sees my investments return to me at around £102, which is a return on investment of around 23%. If we take a look at my portfolio in a bit more detail, you'll see that all the companies I'm invested in currently have netted me a positive rate of return, with some companies netting me quite a substantial rate of return. For example, Nikola Corporations, which is currently seeing around 115% increase in value since my initial investment. We've also got Royal Dutch Shell, which has netted quite a nice 10% return, SSP Group, which I've spoken about in my original video, which is over 30% rate of return to me, Starbucks, Tesla and Walt Disney, which concludes my portfolio there. If we have a look at my allocation, you'll be able to see that Boeing makes up around 15% of my portfolio, with Nikola Corporation just under that at 14%. Royal Dutch Shell is currently around 11% of my portfolio, with Apple and EasyJet 4th and 5th. BP conclude my allocation towards oil, and then obviously there's Tesla, Coca-Cola, Amazon, Walt Disney, and then around 11% of other smaller stocks. As expected, while Amazon and Apple are both netting me a positive rate of return, these companies haven't increased by a massive amount, both 2% and 3% respectively. This is because these companies are now well substantiated within the market, and while they're still going to grow over time, and I see these companies being really strong companies in the future and in the years to come, they won't have such large increases as some of the more emerging and speculative companies that I'm invested in. My investment into Boeing has seen a really nice rate of return of 43%, so let's have a look at that in a little bit more detail. When I first invested in Boeing, the main reason for this was because of the reduction in value due to the coronavirus outbreak, and I decided that Boeing were a strong company with strong balance sheets, so I decided that they would come out the other side relatively unscathed. And this seems to be ringing true at the moment, with them seeing quite a strong rally over the last few days. As you can see, over the last month there's been a steady increase in value, with the dotted line showing my average price per share, and especially over the last week there's been quite a steep increase in value, which is all really pleasing for the value of my portfolio. You can see that my investment in Boeing currently comprises 0.46 shares, with a current value of £81.75. This has returned to me almost £25 in the short time I've been invested in them. The average price I paid per share was $152, with the current sale price per share sitting at $225, which is a really impressive increase in the short period of time I've had this company. Over the next few weeks, as airports start to reopen again, I can only see this developing and increasing in value. As you can see from this historical data, the price in February fell from $336 right down to around $95 at its low, and it's now steadily increased as airports are starting to reopen. So as I've already said, I can only see this developing further. And this is all good news for my portfolio. So as I've said, Boeing are one of the main winners for me. BP has seen somewhat of a good return for the small investment I made into them, with it being around 15% at the moment, which equates to around £5. Which again, as the economy starts getting going again hopefully, and as people are going back to work, more people are going to be buying petrol, more people will be out and about. So again, I can see the value of this investment steadily increasing. Obviously the oil crisis had quite a bit to do with the reduction in value, but again, as people start getting out and about, I hope that this investment will increase somewhat. My fairly small investment in Coca-Cola has seen just under a 2% return, with EasyJet being another big winner for my portfolio. Again here, looking at EasyJet's historical data, you can see that around the COVID-19 outbreak it fell from around £12 per share right down to under £6. And with the news that airports are starting to open up again and Europe may be opening its borders again, this has steadily increased over time, especially over the last month and the last week. There's been quite a stepped increase, which has been really good for the total value of my investment. My investment in EasyJet of 5.5 shares is valued at just over £47 currently, which sees a return of over £12. This sees a return on investment of over 36%, which I'm really pleased in such a short space of time. The average price per share that I've paid so far is £6.32, with them currently being valued at £8.60. So you can see quite the increase it's seen over this brief period. We've obviously got Facebook then as well, which is a company that I believe in for the long term, and I think will steadily increase because it will continually be used and there'll always be people out there who are signing up to Facebook and creating their first account. So Facebook is definitely a stock that I see growing over the long term. As you can see, it's currently giving me a rate of return of around 3%. For quite a small investment, I'm fairly happy with that. Lloyds Bank is up around £2, which for a fairly small investment I'm happy with. This equates to around 21%. When I first invested in them, they were worth around 30 pence per share, so you can see that has steadily increased, and this does pay a dividend as well. My investment in National Grid was a free share that was given to me for somebody signing up through my referral link, which essentially is a free £9.26 that I didn't have before. And you can see since having got that, that's increased by 1% in value as well, which is really nice for something free that I was given. Now the real winner in my portfolio at the moment is Nikola Corporations, which I did a video on previously, so if you haven't checked that out yet, take a look at it. Now I see Nikola as a really good growth stock over the medium and long term. However, I didn't expect to see this rate of growth so quickly and so suddenly. I invested in Nikola on around Wednesday last week before they merged with VTIQ, and I bought them at around $33 per share. It was Monday that we really saw Nikola increase massively in value, with the news that they'd be taking pre-orders on their commercial road car for the general public. As you can see, this has seen my investment in Nikola increase by around 120%, which is exceptional for having only invested in them for a short period of time. I can only wish I'd invested more in them. This 120% across a period of a few days has seen my investment grow by £43, which really is unbeatable. If we take a look at them in a little bit more detail, you can see that they've had quite a turbulent time today, which is Tuesday, with them opening up to around $90 per share before dropping quite substantially right down to $57 as people sold off. But since then, the market has started to rally, people have bought back into Nikola, and they've increased to a value now sitting at $77 per share. Now this doesn't tell the whole story. If we have a look at the data over a little bit more time, you can see the steep increase in value since they merged with VTIQ to become Nikola Corporations. Again, the dotted line signifies my average price per share, which is around $36, so you can see how this increase has really helped boost the value of my portfolio. Again, amazingly, the value of this company has increased by 380% in the last month alone. This really is exceptional, and people who invested in VTIQ back a month ago, or Nikola Corporations when they merged, will be reaping the rewards in the next few weeks. You can see that I currently own 1.25 shares in Nikola Corporation, which its current value is £78. Again, this sees a rate of return of over £42, which as I've already said is around 120%. Now, some people might suggest that I sell these shares soon, with people selling off and taking their profits soon. However, as I've already said, I see this company as a developing company for the long term. The technology they're developing and the targets the company have set for themselves are exceptional, and I really can see this company developing into something quite substantial over the next 5 to 10 years. So while some people might decide to sell off at this time while they're being up around 120%, I'm going to continue to pound cost average into this company and hopefully reap the rewards further down the line. So back onto my portfolio then, we've obviously got Royal Dutch Shell, which again has seen quite a nice increase of around 10% since I originally invested in them. Again, this company was hit quite hard, particularly by the oil crisis, but also by COVID-19, and you can see it's dropped from around £20 per share right down to £13 now. I was fortunate enough to get in at an average price of £12.69 per share, and you can see the sell price now is just under £14 per share. So it's seen around a 10% increase for me, which is just over £5 for my investment of 4.25 shares in this company. So my investment is currently worth just under £60. Again, this is a company that we've seen steadily increase over the last month, and a company that I will continue to invest in for the long term. Now, this is a dividend paying company, and while I don't expect to necessarily have a dividend in the next few months, hopefully once COVID-19 has disappeared and the oil crisis has gone, this will give me consistent dividends over time to increase my value of my investment. As we get towards the end of my portfolio, we've now got SSP Group, which I've spoken about in a previous video, as a company which sells food and beverages in airports, train stations and bus stations. The value of this share has increased quite substantially over the last few weeks, with me netting a rate of return of just over 31% at the moment. Again, if we take a quick look at this, you can see that for the day it is down around 3%, but for the month it's up over 34%. So over the last few weeks it has been steadily increasing, but for the day it is down. But this is in accordance with most of the indexes out there today. If you have a look at the FTSE 100, the S&P 500, they're all down on the day. So you can see my current investment of 5 shares is worth just over £15, with that 31% increase equating to around £3.70 in capital growth. The final 3 stocks in my portfolio then are Starbucks, Tesla and Walt Disney. Again, all of these companies have netted me a positive rate of return, but currently my investment in all of them is fairly small. So monetary wise, I've not seen that much of an increase. However, the rate of return is really promising for the overall growth of my portfolio. So that concludes the quick summary of my Trading 212 portfolio. As you can see, at the end of filming this video, the value of my portfolio is down £10 on where we started at the beginning. This really shows some of the moves that can happen during a day of trading on the stock market. So on finishing this video, my portfolio is currently worth £531.37. That's just under 23% rate of return in the 2 or 2.5 weeks that I've been investing through Trading 212. If you want to invest in Trading 212, or you just fancy getting some free money, like I did with the National Grid company where I was given essentially £9 absolutely free, feel free to use my referral link, and by signing up for this referral link, you'll get a free share and I will also get a free share. All you've got to do is put £1 into the app and wait about a week and your free share will come through. If you decide to do this, let me know in the comments below what share you get.
So there we are. In the 2 or so weeks since I've had my Trading 212 portfolio open, I've seen a rate of return of over 20%, which equates to around £100 in return, which I'm really pleased with. Several of the companies I'm invested in have performed extremely well recently. Companies like Boeing, EasyJet and Nikola. Now, some people might suggest that I should sell these companies in profit at the moment, take the profit and then buy back into the companies later on in the year if there's a dip. But I'm not going to do that. I'm a strong believer that time in the market is better than timing the market, and I like to keep my investments for a long period of time. All the companies that I'm invested in I really believe in, and I think that they've got a long, bright future ahead of them. So by cashing out now, while I might make a short-term gain, I might not get back in at the bottom, which means that I might make a loss in the long term. So I believe that by holding these companies over the long term, we'll see the best rate of return to my portfolio. If you've enjoyed this video and want to see future videos on my Trading 212 account, please like the video and comment below, just to let me know. And subscribe to the channel as well, because it's been growing really well over the last few weeks. When I started out doing this, it was just for myself to track my portfolio over time. But we've now got over 125 subscribers, which is really impressive, and I'm really pleased to see that. So with that said, next video we're going to look at my Vanguard account, and we're also going to look at the difference between accumulation and income funds, which is something that a few people have been commenting below. So we'll spend a video looking at that, and we'll also look at how my Vanguard account has grown over the last few weeks. So there we are. Thanks again for watching, and I'll hopefully catch you in that next video.